The bounce back is a question of whether or not you take it what we're actually feeling and what's actually happening in the economics. The bounce back's happening and it is there. So today we get private capital expenditure that's part of the input to GDP. It's what future intentions and the previous intentions and previous spending of private companies. That's one major component of GDP. So it is going to be for the third quarter. The reason it's interesting is that the third quarter looks like actually bouncing out. We look like coming out of a technical recession, which is 2 quarters of negative growth. There is signs that even with Victoria still at that period of time in lockdown, the rest of the country was expanding in quite rapidly. The spend on just getting businesses back up, standing on their feet in the third quarter will also probably be a fairly positive thing. The question is the future intention. So they also not only tell you what they did, they tell you what they're going to expect to do into 2021 and 2022 and 2023. That's the real question now, is whether or not there is enough confidence to start to see the momentum continue to actually see businesses confident enough to actually spend over the next couple of years. And that's why today's figures are so important. Back onto your point about yesterday's sort of numbers from the ASX. Look, the other thing that's interesting about this is, yes, we're near enough to breaking even for the year. If we have a look at where we are, we're actually technically, if you include everybody's dividends they've paid you, we're actually up for the year. The part that we're now asking, just getting back to CapEx, is whether or not the exuberance and the excitement that's been seen, particularly in the last sort of 6 weeks, actually eventuates into actuals into 2021. Because what may become a bit of a headwind is if all this money that the government is spending, all this money that the RBA is giving us through cheaper loans, whether or not that actually comes into actuals. And if it doesn't, does that mean that in 2021 we actually pull back rather than actually keep going from a vaccination or from what's currently coming through?
Once again, it looks like commodities are the bedrock and will be saving us. But what about net exports too?
Yeah, so why this is interesting is that this year has been astounding for prices of net exports and prices of exports we don't normally talk about. So midway through the year, we had an incredible price in gold. Today, the one to talk about is actually copper. Copper is now at a 2014 high. So it's about $7,300 a ton, or about $3.30 a pound. With regards to what happens in the US. Why that's interesting is we know right now the issues around China. The demand for copper has been incredibly high through Australia, but that slowdown that's happening through that spat that we're having may actually impact us. Copper tends to be our 4th or 5th largest export. Overall, though, once you throw in iron ore, once you throw in coal as well, net exports are probably on track for one of, if not the biggest year on value alone in terms of net exports, and will be an incredible impactor, positive-wise, for next week's GDP and also for the rest of the year.